Hi, welcome to this episode of Jay's Click Weekly Reflections, whereby I reflect on the activity that took place on this previous week and what I did in terms of executions, the trades that I took, why I took them, and the reasoning behind them. So this week, I wasn't that much active. I was still from I had traveled the previous weekend, so this week I was kinda laying low. I wasn't in the mood of trading yet. My emotions for trading hadn't kicked in yet, so I was just taking it easy and laying it low. Like for example, there's a trade that I took. There's a trade that I took. Where was it? Yeah, here. There's this trade that I took on a Wednesday. And as I took this trade, I was targeting this swing high that was here. But emotions took the best part of me, and I ended up closing the trades early, and the trade went up all the way, reaching to my target here. So if I had been patient, I had gleaned something from the market. So I'll start with this one. Then I'll go on to the other trade that I took, the trades that I took on Friday that weren't there were losses actually. So to begin with, this trade 4H, in terms of 4H, we have been gravitating way lower. Let me just open it. I'm come to analyze this trade that I took here in regards to this 4H FVG from here, from there, this gap. Once price respected it, we closed up. We created a swing low by this candle closing, not below here. So that's a bullish sign, showing that market wants to go up. So to go up until where we have a gap that's here, then there are those equal lows, equal highs, sorry, on the 15-minute H that I was targeting. So this was the reasoning behind that trade, because basically market has been pushing up. You can see this expansion coming all the way here. We had a retracement to this fair value gap that's here, where again there's a daily FVG there, but there was a 4H here that we really respected well, created a swing low, this candle, where this candle closed higher than this one, so a bullish sign. Market then came, failed to take out the liquidity that was here. Now, this taking it as a minor swing, whereby this inefficiency lies on the discount side of this swing. This being the swing low, this being the swing high. So once the inefficiency was respected here and you created a swing low, so that was a sign that we still wanted to go high. So the greater target was now these equal highs that was here, because there's a pool of liquidity resting there. And again, this inefficiency that's way up here. So as I was entering here, that was my target around here, but I didn't end up getting the target because emotions took over, and I ended up closing the trade earlier. So if we go down the time frame to how I executed the trade, we come here. I ended up actually taking two trades. Emotions were really crazy taking over me. Then I hadn't settled well from the journey that I had taken. So here we see the first 4H week, the expansion that came up. We left this, there's this fair value gap, again there's this another fair value gap, which was respected by this candle that came strong up here. So as soon as this candle was coming down, I was targeting the half, taking this week from here all the way up until here as a gap. So the half of it, as it was being respected and as the market was going up, I took another buy trade here, the first trade, which was a buy here. My stop loss was below this week here, and my target was here above, yeah, this week here on the swing highs that are there. So that the 4H fair value gap is somewhere around here. So as market was struggling to take up this swing high, I decided to move my stop loss to break even, and it was activated down here, and market came all the way down. Again, market now came down, respected this 4H wick this here, as well as respecting this 15H fair value gap. Market again closed up above high. I took another buy order here, now with my stop loss here, and I just let the market go. The trade was progressing well, but there were earnings. Remember this day there were earnings, the stocks earnings that were coming out, and they made me be a little bit cautious, seeing that the trade might come against me. And as this candle came strong, respected this swing here, so I decided to take my profit, my stop loss to break even around here, where I got stopped out. Because once I saw this now, there was no other reason for price to come way down here. So after I just placed my order, I secured my order, placed my stop loss to break even, then price came, stopped me out, and gravitated all the way to my target that's laying up above here. So as the trade was progressing, I took screenshots, but I have one which is summarizing everything that took place upon this trade, from execution all the way through how I was managing the trade until the termination of the trade. So that's how that trade manipulated, as you can see in this image, explaining how I took the reason behind the execution of the trade, adding the position of the trade, and finally exiting, and trade gravitating all the way to my target. So coming now on Friday, I was still up on the buy pressure, as the bears were showing no sign of going down. So come on Friday, once I saw this down move come here, and then we came up taking that swing high. So this of course was the retracement of the swing. We came again high, but we didn't really take off this swing high. So that for me created a nice pool of liquidity, and as price was coming down, I was waiting for a change in market direction from this down pressure to upward pressure to go and target those equal highs. So as price was coming here, and we were kind of respecting this area, this swing low here, so I just decided to trust the bullish pressure that was here, and I took my first trade here, and I got stopped with this candle here. But once again, once it closed with a wick, so to me, I had already seen that this liquidity had been taken out, and now we were ready to proceed higher. I immediately entered another order as this candle was closing with my stop loss. My stop loss was right here. I didn't want it to risk much. So price again came down, and my analysis here now was wrong. I was really looking forward to these equal highs being taken out, but that didn't happen. So market went ahead, took out my stop loss, and went ahead gravitating lower. So what do I learn, or what did I learn from this trade here? In terms of for this, once this candle closed this week here, I should have waited at least for this swing high to be taken for me to enter a trade, to take this one now as my order block, and take my trade upon this order block. So once this candle closed with a wick, I should have waited to see another candle come and close way up above here with some good nice expansion, then take market once we revisit this order block, take that order gravitating up here. So that's what I'll begin in looking and wanting to see happen before I take a trade, rather than rushing and taking these early trades. Then at the end of the day, I end up being stopped out. So going forward, as the week has begun well, we still have this for HIFG, which I see it being respected, and we still have this daily fair value gap down here. So currently, what's the price action saying? So after that reaction on Friday, then the midnight as the New York evening price action is here, the Asian session. So currently we are upon this swing, but you can see the downward pressure is depleting, but not yet. Don't underestimate it. Still there's some bullish pressure, but still the direction is down. So this swing is still active from here to here. If we happen to close up above here with good momentum, then that for me will be a sign that market has changed direction, and once we come and retest this order block or somewhere there, then my target will still be those swing highs that are resting up above there. Alternatively, if we close below here with momentum, or basically if we just close below here, because now here we've taken this upside, then if we close below this swing high during this London session with nice good expansion, then I'll take sales targeting this daily order block down here, or maybe price going even lower. So currently the direction market is bearish, so we'll term it as bear. That's how we are going to treat this market as until we break up above this swing high. So waiting for displacement below this candle here. Currently, as the London session is in session, we'll wait. If we don't see it now, probably during New York session. If we're seeing a New York session, then well and good, we'll take that trade and see where we'll end up to be. So that's it for this. Just click weekly reflections on this episode. The activity that I took, now I'm in full swing, I'm in full gear mode this week. So we'll react to what the market will be showing us, the direction it will show us. We're going to react in regards to that direction. And if I happen to take a trade, of course, I'm going to document it and share it here. So that's it for this episode. Just click weekly reflections, reflecting on the trades that I took, journaling of my trades, reviewing them on this journey of becoming a great and a disciplined trader.